results. Joining us right now on the phone for reaction is Tony Carbone. He's a stock analyst and managing director at Auriga. I'm sure I'm mispronouncing this. Tony has a hold rating on Cisco with a price target of $25. Tony, pronounce your company for me. We want to get it right.
It's Auriga.
Auriga.
Thanks for having me on your show.
Well, it's good to have you on. So we broke down the numbers. What do you think initially on the report?
So I think that the quarter's pretty much in line with expectations. Solid quarter, beating consensus numbers, both on income statement and balance sheet. Very strong cash flows. DSOs and deferred revenue, very solid. So I don't think that there's really anything to gripe about with the report. I think the key here, of course, is going to be the guidance, and I would suggest that most of the investor expectation is around the guidance.
What are you expecting when it comes to guidance?
Are you expecting it on the call, Tony?
So the guidance will come, generally during the first few minutes of the call. Consensus is looking for roughly $10.65 billion, 41 cents. But that does not include the Tamberg acquisition, which was closed. So obviously, unless something really negative happens, the number is going to be at least $250 million higher than that. With that said, I think expectations are fairly high. I know one of your guests highlighted telecom spending, but one of the areas that we've seen in the last 6 months has been on the enterprise. And I think that investors are looking at data center spending, which up through now in earnings season has been very, very solid. And Cisco is a major player within the data center with its new switching products.
Tony, let me ask you this. This is Zahra Burton here. As far as Europe goes, because Cisco does have quite a big exposure to Europe, I think about a fifth of their earnings or revenue comes from there. And I'm just wondering, how does that complicate the guidance given the problems over there?
That's a very good question, and I think that that's something that if it's not addressed in the prepared remarks, certainly we brought up in the Q&A, because at least our checks did suggest that at the end of April, that while business was solid for the quarter overall, that EMEA or Europe did did taper off towards the end of April. So it'll be interesting with the financial issues that are going on there, what John Chambers has to say, going forward.
And what about price competition over in Japan? In China, for instance? I mean, any sense from the release, just looking there, whether or not margins were crimped?
Actually, I mean, if you look at the report right now, it doesn't suggest that, and I would not expect to see that in the guidance. The one thing that Cisco has been very good at, you mentioned, the Starn acquisition, the Tamberg acquisition. They've been very good at migrating away from point solutions to comprehensive solutions, and because of that, they've been able to really avoid pricing pressure. And if you look at their margins, say versus Juniper, which you had mentioned, which is largely a box producer, they've actually held up very well.
Hey, let me ask you, Tony, about emerging markets growth here, because we were talking with Bill McDermott yesterday, SAP kind of in a similar situation where he said the BRIC countries are contributing the most to growth. It's shocking, though, when you look at the geographical breakdown of Cisco. I mean, over the last 2 years, average growth of emerging markets, 14% and change, and it's only 2% and change from European, from Asian Pacific, from Japanese markets, and less than 0.5% growth over the average over the last 2 years for the United States. Does that picture change? Do they get more out of the U.S. going forward?
Absolutely, and John mentioned this during the last call. He expects the U.S. to lead us out of this recession, and if you looked at the numbers last quarter and the companies that have announced this quarter, it's clear that North America spending, particularly within the enterprise sector, because you're looking at companies now that are generating all-time high cash flow. And what these companies are trying to do right now is, while they're a little tepid with respect to investing for growth opportunities, they're really looking to reduce their cost structure. And networking and data center consolidation is a primary way that a lot of these companies can reduce their costs.
All right, got it. Hey, Tony, thank you so much. Tony Carbone joining us to break down those Cisco numbers.